Good afternoon. This is Professor Milligan, and welcome to another Wall Street Wednesday. Let's see. Today is what? Today is February 17th, 2021. And I will post this video when we're done on my IGTV page, and I'll also post it on my YouTube channel. What's up, Richard Rivera? What's up, Richard? How are you? Hopefully you're staying busy. All right, let's see what else. Let's get rid of that. Cool. All right, let's see. Welcome. Not too much, huh? Yeah, today my screen was literally, everything on my screen was red. Sold out a lot of positions and basically just held on to my long-term positions. So welcome, guys. Welcome. Another Wall Street Wednesday. I've been working on something that I'm pretty excited about that I'll share with you guys today. And hopefully you'll be able to take it and use it to make some money. What's going on, Troy? Troy, what's up, Mike? Mike Reed. Troy, how are you? Hope you guys are staying warm around the country. Welcome. Stay warm. I'm here in sunny Southern California. So it's a little cool here for California. I mean, today I think the high is 65. Let me rub that in a little bit. The high is 65 today, so it's a little cool here for this, but pretty normal for this time of year. All right, I'm just giving people a few more minutes to join us. I did not post anything today. I don't have any pictures. I spent most of the morning, most of this morning, but for the last couple of days, I've been doing some research. I spent most of this morning doing more research. So I've got some things I want to talk about. Yeah, Troy, you finally caught the first hour. And yeah, you're staying warm. Cool. Good. All right, guys. So let's see. First and foremost, what do I want to talk about? First and foremost, let's talk about the market. Real quick, I can't speak for everyone else, but my screen was totally red. A lot of my short-term trades, I end up closing those out either flat or for a slight loss, which is the good news. The bad news is my long-term positions are also down. My screen basically is nothing but red with a few green ones here and there. So we'll see how that goes. I'm waiting for, who is it now? EPAM. I believe EPAM reports on the close today, so I'm waiting for EPAM. But other than that, everything's going well. All right. So let me get down to a couple things, which I think you'll find interesting. For the last week or so, I've been studying and watching. How can I put this? These short squeezes that are being put on by the Reddit folks and everybody else. And by the way, I guess you guys saw that. Who is it? One of the guys from Reddit, or the main guy that was putting the texts out, the tweets out, that he's being investigated and so forth, so on. Again, guys, I've seen this happen a lot. He might be getting investigated. He might be in trouble, but the bottom line is this stuff happens every day, all day. So don't be, what's the word I want to say? Don't be naive about it. What's up, Paul Davis? Don't be naive about it, all right? So over the last couple of days, I've been doing some studying and doing some research. And by the way, that's the way I actually have developed all my trading strategies. I literally go back. I'm a very visual person. I go back and I look at trades. I look at what's going on in the market, and I try to, the best of my ability, to see what these things have in common. I look for common traits. Once I find those common traits in terms of what's going on with the trade, then I look and I start applying those common traits to stocks that have not made their move yet to see if it actually works. So in my research, what I found is this, that a couple things seem to be really consistent with the short-term squeezes that have been put on by the marketplace. And we've talked about this before in certain respects. And what I mean by that is there's two things. Hey, Natalie, there's two things that is a trader that I always watch in the marketplace. And I think it's two things that you guys I've talked about should always watch. And you cannot hide it. And that's price and volume. You cannot hide price and volume. So if you think that, for argument's sake, let's talk about it. You're a trader, or traders are out there, they think they got an opportunity to make some money. They're looking at that opportunity, and what do? They take a position in it. The only way you can benefit from that is to take a position. The only way you can take a position is to buy the security or short the security. And the only way that you can do that is it's going to show up in the volume. So one of the things that has been really interesting with these short squeezes is that the volume has been tremendous. Now I'm not talking about a 10% increase in volume. And some of these stocks, I'm seeing anywhere from a 5 to 10-fold increase in volume before the stock even starts to run. So let me explain what I mean by that. You got a stock that trades 1 million shares a day, and you look up and the stock is trading, now again, 1 million shares a day, and you look up and the stock has traded 10 million shares. All right? That type of volume is going to move a stock. All right? So I've seen that. Now, the other thing too is understand this. If these guys are definitely, again, I'm not saying that, but if they're front-running trades, and for those who don't know what front-running means nothing more than I'm going to take a position in the stock, and then after I take a position in the stock, I'm going to go around and tout it to anyone and tell everyone what a great opportunity it is and get people to buy it. I'm front-running the recommendation, which is actually frowned upon on Wall Street. But anyway, these individuals, when they front run, the only way that you can front run is you have to actually start taking a position in the stock. So where's it going to show up again? It's going to show up in volume. Look at the volume. Now, when I went and did some research, and let me just refer to my notes. Paul, I'm going to explain how to capture that in real time. So I'm going to explain that. So let me look at my notes. So I wrote down here, the other thing I noticed was that the volume increased anywhere from 3 to 4 days before the major run came. So we had 3 or 4 days of up volume. When the stock starts to break out and run on this heavy volume, that real legitimate squeeze and run is going to last anywhere from 3 to 4 days. That's what I've seen. All right. If you go longer than 3 or 4 days, you're running the risk of this thing pulling back because they can't hold. Once again, understand, if this stock is truly being squeezed up, once that buying stops, it's going to end up trending back down. They're not looking at fundamentals. What they're looking at is, and it's pretty interesting, they're looking at the size of the short position. They're taking a position in it, and then they're starting to tout this thing, and when the volume starts to show up, it squeezes and squeezes, and it'll run for 3 or 4 days. The other thing I noticed was that the price of these securities, when they start their initial move, they all tend to be under $20. In fact, the majority of them tend to be down under $10 a share. So we're seeing that squeeze. There was one today, LODE. I don't know if the name is LODE. Stock had 1,000% increase in volume. And if you look at the stock, LODE. If you look at the stock, you'll see that the volume increased before it started to run. Volume increased on February 1st. On February 1st, volume increased again tenfold. Stock traded sideways from there, and then today, boom, it popped again off of volume. It opened, the previous day closed yesterday was $2 a share, 2 and change, and then it gapped open today and ran as high as $10, closing at $5.46. Now, based upon, again, I haven't done all the research. I have to see. But based upon what I've seen in the past, we should expect the kind of move we've seen, that more volume and more move to follow this. But again, I'm doing my research. I'm not making any recommendations. I'm not being called in front of the SEC because I'm telling you guys what to buy. So how would I play this? The other thing, before I forget, the other thing is, having gone through the fundamentals, throw them out the window. These are pure trading opportunities. Fundamentals do not play a role in this. I went back and looked at some of these companies in the fundamentals. Most of them are losing money. The ones that are making money, when they make that run, they're trading at 100, 200 times their earnings. So again, fundamentals are out the window. They're running these. The other thing I checked was, which we talked about before, you want to look for stocks that have a high amount of short in it. Now, what's interesting is, looking at this and doing this research, for the last 2 weeks, 3 weeks, all the stocks with large short positions all ran. And part of that running was, I would say, is that some of these guys that were short the stock decided to cover after seeing what was going on with AMC, Telray, Clovis, what else? GameStop and the rest of them. So they started covering. So I would be quick to pull the trigger. So as Paul asked me, he asked me how would I play this. Two things I would do. One, I would track volume. Now I found two websites just in a quick search that you can go to. One of them is actually MarketWatch. The other one was barchart.com. You can go there and you can actually see intraday volume. You can see, they'll tell you what the stock is, the volume, and how much the volume has increased. So the first thing I would do is I would track stocks that have tremendous increases in volume. After I see the stocks that have tremendous increase in volume, the second thing I would look for is I would then track, I would track and see what price they're at. I would track and see, I lost my train of thought. I would track and see what price they're at. I would track and see, and again, I'm looking for stocks in the, in the teens, the low teens, single digits. So I'm tracking that. I would track the volume, and then I would just look for the breakouts. What I would do too is once I isolate a stock, and I isolated a few of them, but I'm not going to talk about them right now just because I'm still working through my strategy here. But once I find a stock that I like, the next thing I would do is I would set an alert up in my, in my stock watch. And my alert would be tied to two things. My alert would be tied to price and volume. So I'd have two alerts, a price alert, a volume alert. What's up, boo? I would have both. And the reason why I'd have those alerts is, again, when I went through this today, I found dozens of stocks. The question is which ones are going to move and when they move. From what I've seen, you can put an alert out there to see a 100% increase in volume. These stocks, when they start to move, the volume increases. The first hour of the day, they've already surpassed their average daily volume. So I would track them and put alerts on price and volume. Not so much the price of a new high, but the price in terms of a move of more than 10% in a day. I would track the price movement, I would track the volume, and then when I saw that, I would look to go in. Again, if you go in, be nimble, use a stop loss. The other thing I would do is, again, based on my analysis, and I want you guys to do some looking too, that run was probably last 3 to 4 days. GameStop's run lasted longer because GameStop had a bigger short. All right, and so they squeezed this thing up. Again, if there's not a huge short position, they're still running these things. It's amazing what I saw when I looked at that. So again, the thing I would follow, price, volume. Again, I am in looking at marketwatch.com. And on marketwatch.com, I have the stocks with the largest short position. Of course, AMC's up there now, a couple others. But it's interesting to see the stocks that are up here and the stocks that have already made moves based on being up here. Then when I went to barchart.com, hey, Cody, what's up? Daniel, what's up? When I went to barchart.com, I went under stocks, and under stocks, I went to exchange volume percent advances. So it's showing the stocks that have had the biggest increase in volume and their price advances. And I'm looking at one stock up here. Symbol's PETZ. So I'll let you guys look at it. PETZ, PETZ. Take a look at PETZ. Today was the number one stock up here. Volume increased. The volume increased 1,600%. Stock's up $1 and change off a $4 stock, and you can see the volume in the move. Now again, based upon my analysis, and I have to do some more research on this. This is all, again, guys, this is all technical analysis. There's nothing fundamental in here at all. All right, based upon my technical analysis, if this move is legit, we'll see. You should see also a spike in volume for the next 2 days. Now, what's interesting is look at the previous, for those who have the chart up in volume, today's volume, hold on a second, I'll make sure we understand this. Today's volume, I'm talking about PETZ, tdhholdings.com. All right, I'm looking at that. Yesterday's volume in the stock was 2.4 million shares. Average daily volume is 291,000 shares. So we almost had a 10-time increase in stock in terms of volume. All right. The next thing I'm seeing is that was yesterday. Yesterday there was a 10-fold increase in volume. Stock was give me the numbers. Stock went from basically a low of $2.51 to a high of $3.29. closed up 63 cents, 25% move. Then today, the next day, volume was up 1,600%. In other words, the volume starts to go even when the stock moves. So I would use volume and price movement. I would lose volume again over its average daily volume, over 100%. And I would use a price move about 20% or more. And then I would track it. All right, how often have I seen this? Well, from what I'm seeing right now here, Paul, I am looking at a list, and I went through the list, and I want to say the list of the top moving stocks in terms of volumes. Again, I'm looking at this and understand that this all happened today when the market was basically down all day. Every stock on my screen is red except for these. It's pretty amazing. Now, some of them have moved because of things going on in the industry, the business, but there's a bunch of them here that are moving off. I mean, I'm not trying to be funny. I got a $4 stock that's up over, volume-wise, up over, 1,000% in volume. Something's going on. Don't ask me. They're pushing it. And if you're doing technical analysis, you're going to trade this, follow us, and move right along with it. All right. Something else I'm going to tell you guys. I forgot that quick. Don't get old. Boom. So again, for those who just joined us, we're talking about how to find, quote unquote, the next GameStop, how to track it. All right, how to track these low price stocks that are running on volume. Again, the key here is volume. Track the volume. All right, I'm looking at a list right now of, let's see, that's about 10, 20, 30, 40, 50, 60, about 60 stocks, 70 stocks that have their volume over 200% for the day. All right. Some of them, and the majority of them are down in the teens or lower than the teens. There's a handful, small amount that are up there, $70, $80, $100 or more. The bulk of them are under $20, and the real bulk is under $10. So they're affordable. You can trade them. The thing, like I said, I would do is I would check these. I would check the volume. I would also look at the short interest. Now, what's interesting is some of these stocks are running without much short interest. All right, how do I navigate what you're looking at on barchart.com? All right, for those who want to follow me here, I'm on barchart.com. I'm going to do it myself. On the headers up top, it says stock. Click on stock. Then a menu will come down, that pull down menu. Look in the middle where you'll see on the pull down menu, most active. Then you'll see a button that says volume advances. Click on the one that says volume advances. And there's your list. All right. Now, once you get the list, there's a pull down window that says all U.S. exchanges. Next to that, there's another pull down window that says performance. Switch it from performance to main view. Now, you can also do technical, but I just do main view. And under main view, what they have now is they have the name of the stock symbol, the name of the company, the stock price, the last price, the change, the percentage change, the high, low for the day, and the volume increase. Now, here's what's interesting. Something that's just popped up I've never seen before. It's A, Apple, Harry, Apple, Charlie. And the only reason I pull this one up is because it's also had a huge increase in volume. Stock's up a 20% move in the stock today off a huge increase in volume. So again, I'll take a look at that. All right. So that's what I picked up off of this. I think, again, this is pure technical analysis. If you're going to do this, once you take your position, do not forget your stop losses. 1. 2, this is not an investment. Do not get married to the stock. Do not hold the stock longer than a week. All right, I'm just telling you, be nimble. They're moving these things. They're moving. A lot of them are not what I call quality companies that you probably want to own for the long term. Heck, I don't know. Some of these companies, I'm not even sure if they're going to be around over the next 10 to 15 years. Next 10 to 15 months, forget about years. So all I'm saying to you is yeah, Troy, a 1,000 plus volume. I mean, this is crazy. And the other side is you got all this volume and the stocks have moved up. How can we see how short it is? Great question. There's a couple of places you can do it. the easy one, I do it on my, I use TD Ameritrade. I have a couple other sites, but I use the TD Ameritrade. But the place you can go to for free, which I'm doing right now, is I'm going to, believe it or not, I'm in Yahoo Finance. So let me walk you through what I do here at Yahoo Finance. In Yahoo Finance, punch in the symbol that you want. So go to finance.yahoo.com. I'm going to do AHAC, which is what we just saw in terms of volume. All right, once I punch that symbol in, you'll see the stock price. Underneath the stock price, you'll see a row that says summary, company outlook, charts, conversation, statistics. Go to statistics. Once you're in statistics, and by the way, for those who don't know, I also talked about this last week. So I know I'm being redundant, but I talked about this last week, and I believe I know I had a chart up which showed it. But I'm in statistics. I'm paging down to what they call share statistics. Now I'm going to read it from the top of this particular category. Average daily volume on the stock, 26,000 shares last 3 months. Average daily volume last 10 days, 18,000 shares. Now again, guys, I'm talking about AHAC. Name of the company is, I'm just going back, Alpha Healthcare Acquisition Corp. You know what? I know what this is now. I'm backing off of it. This was a SPAC. That'd be my bet. This was a SPAC that finally probably put something in the portfolio. That would be my actual bet. But anyway, since it's, and by the way, so I wouldn't trade this at all. This is a different beast. But anyway, looking at this, I shouldn't say that. I wouldn't trade it that way in terms of the volume breakout. The short interest right now is 41,000 shares. So again, you have a stock, just giving you some statistics, that trades 26,000 shares a day for the last 3 months. The last 10 days, 18,000 shares a day. 10 million shares outstanding with 41,000 shares short. 41,000, not 41 million, sorry about that. And again, the ratio would take a day and a half, a day and a quarter to actually cover that short. So that's what I'm looking at. All right. Let me pull up a different one since we're in this. I'm gonna pull up a different stock. If you go back up to the top, you'll see a quote look up, and there. Let's type in there. Who else did I look at? Let's type in there DOGZ. Dog Z. I just happened to pull it up. So let's see, Dog Z's $2.88, up 65 cents today. All right. Hold on a second. Let me give you Dog Z's volume. DOGZ. Dog Z's volume. Bear with me 1 second while I read it to you. So Dog Z's average daily volume is 1.8 million shares. Yesterday, I'm sorry, let me get this right. 2 days ago, it traded 2.2 million shares, twice the average daily volume. That's 100%. Yesterday, it was 4 times, well, about 3 times average daily volume. And then today, average daily volume of 12 million shares, it traded 103 million shares. 103 million shares. Now I'm looking at, again, I'm on Yahoo Finance. 10-day average volume again is 1.7 million shares for the last 10 days. And on the short side, they have 190,000 shares short. It's not a huge short position, but again, this is what we're checking. But you can see right now, this has had a big move. And again, just like I told you, the day before it happened, the volume was already up over 100%. Now going back to, hey Jarrett, what's going on? Going back to barcharts.com to where you can see the volume change. You'll also see on Dog Z, which is Dogness Corp Class A, that average daily volume, that today was up over 1,500% in terms of volume up. So again, I'd look at this, I'd look at the ones that are trading 100, 200 times the average daily volume to try and see what's going on. I check them against volume and price, and I'd start tracking these things. Let's see. I got a question here. What number are we looking for the short position? What's interesting is, and let me go to another. Now I'm on. I'm laughing at myself. Now I'm on MarketWatch.com short interest. I'm on MarketWatch.com and I'm looking at short interest. And one of the things that you'll see here is that on MarketWatch.com they have the short interest, and then they have the float and the percentage of the float shorted. So in other words, I'm looking at AMC. AMC has a float of 56 million shares. Of those 56 million shares, at the time, 67% of those shares are short. To give you an idea of what happened with GameStop, at one point it was over 141% of the float was short. So they were short more than the actual float was. So that's another way you can look at those. You want to, again, especially if you're looking for that short squeeze, you want to look for things that have a high short interest. Anything north of 25 or 30 is pretty high. The other thing that you want to look at is the short interest and get a good idea of how many days it would take to cover it. The longer it takes to cover the short interest, the more that when it does start to run, if it gets squeezed, the more it's going to squeeze up. All right. The other thing I was going to tell you, which is also interesting, looking at this list of stocks with large short interest, there are also a couple of stocks up here with big short interest that are trading at or near their all-time high. Now that becomes interesting. When a stock's trading at or near its all-time high and has a large short position, what are they telling you? Well, I hate to say it this way, and I'm laughing as I say it. Sometimes, a lot of times, it's certain investors who say just because the stock's at its all-time high or near its all-time high, that it's overextended and it should be short. And they short it because of that. They're not shorting off of fundamentals. They're shorting off of basically that they think the stock is way overextended. My experience has been with those, you want to be really careful. So I'm going to punch up one of them right now and see what it's doing. So I'm not going to talk about that one, but I wrote it down. Who's it? ASO. If you punch up ASO, look at the chart. ASO it's God, I forgot the name that quick. What is it? All right, let me get the name for you. ASO is Academy Sports and Outdoor Inc. There it is, Mike. Academy Sports and Outdoor Inc. Went public a couple of months ago, a couple of weeks ago. Hasn't been around that long. What's interesting, I have been tracking this. Now let me explain to you what's going on. Let's see. Average daily volume is 1.6 million. Average daily volume for the last 10 days is 1 million shares. And looking right now, they have short 10 million shares. All right. It would take 7 days to cover this short. As a percentage of the float, it's 39%. What this means is that as this stock had went higher and higher, people thought people have gotten short the stock. Now, as you look at this chart looks like, this looks like a chart that you would want to be long the stock. All right, that's what this chart looks like. From the IPO point, hold on a second, I'll even give you the exact numbers. From the IPO, I believe it went public at either $13, $14 a share, but from the IPO, it's done nothing but pretty much go straight up over time. So here's what happens with these. Again, I can't tell you what's going to happen in terms of which way it's going to break, but here's what I can tell you. At some point, either the shorts are going to be squeezed out and going to force the stock up, or the shorts are going to be right and the stock is coming down. I can't tell you which one. Basically, again, looking at the chart technically, great looking chart. I'd have no problem on any type of volume breakout to the upside of being long this stock. But at the same time, knowing that short position. So again, having seen these before, having been around these, my bet is, again, my opinion, my thought process is I would go long ASO with some stop losses on it to protect myself and look for the short squeeze. That's what I would do. I'd track this thing based upon price and volume. And when I saw spikes in volume, especially to the upside, I'd probably look to get long. I trade it that way. Now, the interesting thing about this is Right now, it seems to be fundamentally, I haven't gone over all the fundamentals, but it seems to be a legitimate company. I believe they're based out of Texas. So it seems to be a legitimate company, one that I would definitely track and one I would follow. I am following it. So it's already on my it's already on my list. It's always been on my list. The other one I saw today, which also has a huge short position. Nope, that wasn't the one. Is Now this is another interesting story. This is Root, Root. Root went public a couple of months ago, back in 2020, excuse me, back in October 2020. Stock basically has come off and traded all the way down from a high of 30 down to the low of 15, and then it's starting to run. Now here's what's interesting: another large short position. All right. Now this stock is really volatile. It's been seen to move in all directions. I'm not sure what I would do with this. I would watch it. Hold on a second. I'm pulling up the short position right now. Take a quick look at it. So again, here it is. Average daily volume is 1 million shares. Float is 54 million shares. Of the 54 million share float, 8 million shares are short, with a coverage ratio that would take it three and a third days to cover the short position. So, hey, what's going on? So with all that said, Gabby raised. Hey, Gabby, how you doing? With all that said, again, with this stock, what you're looking at right now, I would politely put as a battle between the longs and the shorts. Just that simple. The short believe it's going lower. The longs believe it's going higher. I'm not sure who will win, but the bottom line is I would track this again based upon volume. I track it based upon volume, and any price movement more than 10 or 15% in one day, I track it for that. And then look, it's had some moves to the upside. It's also had some moves to the downside. Excuse me. All right, that's what I'm talking about. Let's see, I got a question here. Are you saying technical analysis is a way for shares trading at ATH with a large short interest? I'm saying that a lot of these companies, as you saw with AMC, with GameStop, with Telray, there are no fundamentals. There's no fundamental reason why to buy GameStop. There's no fundamental reason why to buy AMC. They're speculative. All right, they're turnaround situations. There's no fundamental reason why to buy them. If you're buying those stocks thinking they're a long-term investment, the only thing I can say to you is please come to one of my investment classes at the university so I can talk to you a little deeper. There's nothing fundamentally in these companies. So if there's nothing fundamentally in GameStop, AMC, what made them run? A short squeeze, buying, supply and demand. All right, more people wanted to buy it. And when they stopped wanting to buy it, what did GameStop do? What did Telray do? What did they all do? They all pulled back. So all I'm saying to you is that if you're going to follow the short squeeze, and again, think about it. The reason why these stocks are short and people are short these stocks in the first place is because they're not doing well at all. All right, they're not doing well at all. So the bottom line is because they're not doing well, that's why the short positions have gotten so big in them. Several of my students that are on this call right now will tell you that we always talked about being short GameStop. That was one of the stocks we talked about being short. Why? The business model, the fundamentals on that thing deteriorated 4 or 5 years ago. All right, it got squeezed up, and the reason why it got squeezed was because it was a short squeeze, not because of fundamentals. It was all basically technical analysis. All right, so here's the deal, Danielle, excuse me. I am a college professor. I teach finance at a university. And for those who want to know, I am putting together a master class. I am putting together a class where I'm actually going to talk about and teach how to trade and different trading strategies. I'm putting that together. The challenge I ran into right now, you're going to laugh when I say this, is it probably would have been already up and running by the end of December, early January. And then when this whole GameStop thing came about, my lawyer, whose job is to protect me, basically said, let's put a hold on this right now. He said, because I think there's going to be some lawsuits and some other things coming with some of these guys putting out recommendations. You don't want to be involved in that. So we slowed down. I'm in the conversation with my securities attorney to try and get something worked out so I can actually do these things. And I'm also in the process right now of putting together some PowerPoint presentations or PowerPoint classes. So I will be able to work with you guys and help you guys understand and learn this. There's a lot of information, and as you guys have always heard me say, the only way to win the game is to know the rules of the game. If you don't know the rules, you can't win. If you don't know the rules, you're subject to somebody else telling you what to do and when to do it. And I don't know about you, but I don't want anybody else telling me how to do it. One of the most empowering things that can happen to you as an investor is the ability to turn on that machine, look into the screen, look at these different stocks, and figure out how to make money. All right? It's empowering. You don't have to talk to anybody, have to look at anybody. You just go and do it. You don't have to worry about the phone call coming, hey, Milligan, what should I do? All right, you figure it out. I'll help you learn how to figure it out. So that's where we're going with this. Now, I'm going to jump off into a different subject matter, unless there's a question or two about these shorts and what I just went over for the last half hour. And I imagine that I'll be talking about this more in the future, so I'm not. But the other thing I wanted to bring up is this. One of my former students emailed me and said, Professor Milligan, I'm thinking that I want to stay long. I want to get long oil. And I said, yeah. And I said, why? And what was really interesting about it, he said, I want to get long oil, Professor Milligan, because of this cold front. Now, some of you might think that's obvious, but here's where I really want to go with this. There is no such thing as any company or any corporation living in a bubble. There's no bubbles around here. And what I mean by that is this weather is going to affect a number of businesses. We know this going forward. You must be forward thinking. So why am I saying? What businesses are going to do well because of what's going on with this weather? What businesses aren't going to do well? Call it luck, whatever you want. Several years ago, I am long some home suppliers. I can't remember the name of this company. I'm long home suppliers, Home Depot, Lowe's, that type of company. But it wasn't either one of those. Can't remember what it was. But anyway, I'm long this. And believe it or not, I'm long some synthetic options. Those who've been around know what I'm talking about, but I'm playing this thing long. And Katrina hit. And Katrina hit, as you guys know, hit in the south, the southeast. And this company was based out of the southeast and was the largest supplier for home building supplies and so forth. Well, as Katrina hit, that stock took off. All right. I happened to be in it before Katrina hit, but that's what's going on. You must be forward looking. Anytime you see an event in the newspaper, anytime you see something going on, and no, it wasn't Tractor. It wasn't TSO either. It's going to come to me. It wasn't TSO. I've traded TSO, but it wasn't TSO. And again, you know how far back Katrina was. I can't even remember what I had for breakfast. So I'm not going to remember what stock it was. But it was literally, I'm long the stock. It was earnings season. I got long ahead of earnings. I was expecting great earnings. Earnings came out. They beat the number. So I stayed long the position. I had a synthetic and I had time. So I said, I'll just stay with this for a little long, see how it works. And no sooner than I say that than Katrina hit and this thing just exploded. All right. So all I'm saying to you guys is, believe it or not, be forward looking. Look forward. Read the newspaper. What's going on? All right. How's this going to affect companies? How's it going to affect your companies? How's it going to affect? So let's take a case in point. This snowstorm has had to have hurt Amazon's sales and deliveries. Now, it might not hurt their sales, but it's definitely going to slow down the deliveries. All right. Who else? Think about them again. Forward looking. I'm going off the top of my head. I'm thinking about the DoorDash and the Ubers of the world getting hammered because there is no service right now in the Midwest and the East Coast for those companies. There's no service. All right. People are locked in. They're at home. So that's what I mean by forward thinking. And you start thinking about that, and also what industries will do well. Now, it's not just the weather and snow. You can do this with anything. Oil prices at an all-time, not all-time, oil prices over $6 a barrel, and they're rolling. All right. Oil prices are rolling. Heating oil is rolling. Diesel fuel, all the energies basically are rolling to near-term highs. All right. They're rolling. So who's that benefiting? Who's that hurting? Now, you guys know me. I don't like buying oil stocks. If I'm going to trade oil, I'm going to trade the oil futures. I'm not big into oil stocks because oil stocks tend to be heavy levered. And the other thing about oil stocks is, and this is the whole oil industry, it's a geopolitical animal. What I mean by that is oil is also affected by politics. All right, that's the reason why I never liked trading oil, because I could never get around my head around those politics. But again, understand what's going on. Understand what's going on with this weather. Now, some of you will say maybe I should trade those. They're high, and those who understand the futures know that they're seasonal, which means that right now we know historically that these are always going to move up during this time of year because of the weather. The question now is, are they going to run even further? All right, but let's go the other direction. Let's go the other direction. Because of this weather and what's going on, look at the grains, corn, soybean. Look at them. They're running. Why are they running? Supply now. This weather is definitely going to hurt supply of corn and soybean. It's definitely going to hurt the growers. All right. Well, so this weather is going to hurt them growing more, the farmers for planting crops for this season going forward. It slowed them down. It's delayed them. So what does that mean? That's why you're seeing corn prices roll. That's why you're seeing soybean prices roll higher, because they're being squeezed, because forward-looking people like me would say, there's probably going to be a shortage of supply. And if there's a shortage of supply of corn and soybean because of weather, then prices have to go up. Be forward-looking, all right? You'd be surprised. It's common, what's the saying? Common sense is not as common as we think. Well, it's common sense. Be forward-looking, all right? As you read the newspaper, I talked about this. Be forward-looking on the newspaper. As you read the newspaper, look what's going on. All right, the market's doing that. The market's doing that with President Biden and this whole stimulus package. Are we going to get the stimulus package? We're not getting the stimulus package. We're going to get this. We're going to get that. The market's looking at that. All right, everyone knows that if that stimulus package hits, there's going to be more cash in consumers' hands, and the markets should run from there. If we don't get that stimulus package, but they're going to, again, forward-looking. I love what you're saying about forward-thinking. I'm sorry, I was reading Danielle's comments. I'm not sure if I should read, but you guys all see it. All right, so I just want to talk about forward-looking. I talked about, again, short squeeze, volume. Look for volume. Anytime you see a stock trading more than 200% on its average daily volume, take a look at it. All right, just start tracking it. So look at volume and then look at price movements. Again, when these stocks do break out, the ones that we're talking about, these low stocks that end up getting squeezed or run, the volume seems to be tremendous increase in volume. All right, again, when I say tremendous, tenfold. I mean, just, do a little research, do a little looking, and you'll see it. All right, I covered everything I wanted to cover, so, I have a couple of minutes left. Is there any questions on any stock you want me to look at? I had somebody show me another ETF. You guys know I'm not really big into ETFs. And I got to caveat that. I am not big into trading ETFs. I own ETFs in my own retirement account. All right? I'm telling you what I buy. I own SPY. So I'm not saying that ETFs are not a good investment. That's not what I'm saying. I'm saying I don't trade ETFs. So when you ask me about an ETF, I'm going to say if you're a long-term investor, like the Kathy Woods ETF that you guys had shown me, if I'm a long-term investor, yeah, I'm buying that. Now, let me just say one thing, and this is not negative to Kathy Woods at all. Again, let me say it again. Not negative at all. She's not going to cover off the ball. On mutual funds, and some of you know the story, when the mutual funds, if you're buying mutual funds based on the top performing mutual fund last year, expecting to be the top performing fund this year, it hasn't worked. All right? Going back to the dot-com bubble, and I know I talked about this, there were about 5 or 6 funds. Now, actually, more like 10. There were 10 equity mutual funds during the dot-com bubble in 2000, 2001 that actually put up over 100% return. All right? Zoom forward 10 years later. Actually, you can zoom forward a year later. A year later, none of them put up the same numbers. None of them actually outperformed the market. They all underperformed the market. First thing. Second thing is, over the next 10 years, they all are gone, out of business. Some of them, a common thread, they all dropped in price, and either they were acquired, or they basically just went out of business. Um, shouldn't Nina be putting money into me? No, Nina's. I actually have made some recommendations to Nina, and she's put them in her own account. I can't really do much with Nina's account. Um, she works for an investment firm, so therefore she has to make all the decisions. Long story short version. So anyway, again, all I'm saying is don't buy an investment just because of the ETF, just because of what it returned last year. Saying, if it turned 10% or 100% last year, it's going to do 100% this year. That's not what we're doing. And again, be forward looking. If you listen to Kathy Woods, I've heard her talk a number of times. She's forward looking. I heard her talk a number of times since you guys told me about her. Really, I've done some research. She's forward looking. She talks about being forward looking. When she talks about the crypto, she talks about being forward looking. All right. Please, guys, be forward looking. Someone else. What else? Square and Fiserv with the resurgence of small business. Could be. What's up, Sonny? Let's see what else. Let's see. Somebody's asking about Apple. AAPL. Apple's easy. As the market goes, as Apple goes, so goes the market. As the market goes, so goes Apple. I mean, it's just that simple right now. The correlation's high. It hasn't broken yet. So that's pretty much with Apple. I've never traded Apple. Just buy it and hold it. I have never been a trader in Apple. Just buy it and hold it. You'll be fine. I believe. Now again, that's my opinion. My opinion. Let's see. Somebody's asked me about this. BK, Bank of New York. I'm not a fan of bank stocks. Sorry about that. Reason being I'm not a fan of bank stocks is bank stocks bank stocks are a weird animal. All right. Debt is an asset. Debt is a liability. Which is it? It's both for them. And the problem that I have with banks is you and I can't really look inside and see what's in the portfolio. We just can't see what's in there. We can't see what loans they have. We can't see the quality of loans. We don't know who they're loaning money to. We can't see any of that. Price banks off of their earnings per share is really not taking into account risk. Yeah, I remember Steve Mnuchin. What about Steve Mnuchin? So I'm not a big fan of that. I would not. Again, I'm just not a big fan of bank stocks. So I really can't help you much on that one. Snow. I like Snow, but here's what happened. Snow tried to rally, and the rally failed. And what's interesting is I'm looking at my charts here. For some reason, I got a line at 320. And it rallied to 320 and it basically failed. And 320 was the old high on the old trading range, going back to when the company IPO'd. I think it's long term a good company. I think right now it's just having a hard time getting through the muck here. It might have got overextended. And once it got overextended, now it's just doing back in the filling and trying to clean up this mess. It'll be interesting to see. Earnings are due out soon, so it'll be interesting to see how they respond to earnings. When it made this last push, I really thought that it was going to challenge or try and push up to, through that 300 level, which it did, but push up to that 360 up to the 400, and it just didn't. It ran out of gas again. So it has work to do. Cisco and WebEx, huh? I haven't looked at Cisco in years. It's been years. Haven't traded that stock in years. Technically the stock looks good. The only thing I would say to you looking at the chart on Cisco is, bear with me a second, I need to go back a few years. I just need to see what it looks like over time. Go this way. All right, let's see, Cisco. If as a trader, I'm not sure if I got any real interest in this. As a trader, I'm not, this is me. Stock looks like it beat on, let me see, did it beat on earnings? Reported, estimate was 76 cents. They missed on earnings, but the stock is a little higher. It looks like the stock ran a little bit off the earnings from 46 to 49, but now it's back down to that 46 trading range, and it's trading range between 46 and 43. I guess the thing I would say to you, if Cisco's going to run, how much are you going to get in it? I don't see much in it. You follow me? So You follow me? In other words, is a trade. I'm not sure if you're going to get much out of it as a trade, and as a long-term, you'll probably get more out of it as a long-term investor. But it looks like it's got some work to do here as a long-term investor. And the other one, I haven't looked at WebEx basically since WebEx went public. How many years ago? How many years ago was that? Let's see. Oh, I can't find the symbol for WebEx. All right. What else? I'm getting the EH. No, EH, not EW. EH. Interesting. So for those who don't understand or know, and I'll get hopefully I'll get to Dog Z in a minute. I got to get out. I can't go over an hour. I'll lose my recording. EH is another one of these ADRs. ADRs are stocks that we can buy here in the States, but they're based on a foreign company in their own market, on their own exchange. So this is an EDR. That's going to be an ADR, EH. A number of these have moved. For me, again, they fit the criteria of what we just went about. Tremendous increase in volume, typically ahead. And the stocks, when the volume does hit, they squeeze and they run, and it'll last for maybe 3 or 4 days, and it pulls back. My only fear with these are, again, if I was going to do this, I would only trade these. And my big fear is, which I've seen happen a few times. What was it? Luckin Coffee is one. Is that there's some fraud behind these, and that as quick as they run up, is they can quickly pull back. In fact, if you look at EH, it ran from basically $30 a share up to 100, pulled back to 65, and it ran back to 130. And in one day, it went from 120 down to below 50, one day. And then today it's up again from 50 to 73. So my comment to you is, if you're going to play that, if you're going to play this game and play that, just be ready for the roller coaster ride. And as you can see, they can turn on you real quick. So that's what I would look at. But again, it meets the criteria. The volume's there, the price move off the volume is there. You can just see it. And this thing did run. And quite frankly, there's a few of these ADRs based out of China that have run like this. All right, what's the other one? Real quick, is that it? SOS, another Chinese company, ADR. Same exact type of move. Take a look at it when you get a chance. All right, let me see. Any other questions here? I got a minute or two. I'm looking. What do I think about dog? Oh, so real quick. I heard Mark Cuban say it. I've said it. A number of my friends say it, and I'm going to say it again to you guys. The cryptocurrencies, all right? There's no fundamentals behind them. Trade them trade them as a trader. What I mean by that is there's no fundamentals behind crypto. What's moving them now is that you have more and more corporations saying that they're going to take cryptos and use cryptos. Bitcoin, that's why Bitcoin's running. I don't know much about this Dogecoin. Dogecoin, I believe it is, Dogecoin. So I can't really speculate on it other than maybe the chart. Just a second. Let me see if I can find the chart. But symbol's what? DOG. I'm trying to find the symbol. I can't find it. Oh, there. Let's see. There it is. But that's not US. See, I don't even know how to find the chart on this thing. So I'm not against cryptos. I just don't understand them. I need to do more research. But the bottom line is on cryptos, I would trade them off of technical analysis. I wouldn't trade them off of fundamentals. Now, what's interesting is though, and this is one of the challenges that we can't do. We can't predict when these high-profile celebrities are going to come out and talk about cryptos. But again, if you think about that, that's the catalyst that's driving it right now. The catalyst that's driving cryptos right now is not anything fundamental. It's the fact that Elon Musk has taken some of his company's excess cash he has now and he's brought cryptos. You have Mark Cuban talking about how the cryptocurrency blockchain technology is the internet of the future. All right. So you're getting all these positive endorsements from people, and I call it they're talking it up. So that's why the cryptos and overall are moving. How can I say this? There's an old saying that when the police raid the brothel, they arrest the good girls and the bad. And all I'm saying to you along that lines, and some of you who work on the street, I know you've heard that before. All I'm saying to you is that right now they're raiding the cryptos. All of them are good. They're driving them all up. Now, are they all really good? I don't know. But right now, as far as the market's concerned, all the cryptos are good. Pick one and roll with it. I'm not sure how to decipher between the good ones and bad ones. I'm not sure what they're looking at. I'm not sure what determines it, other than the fact of Elon Musk talks about it. The young lady Woods talks about it. So I think that's actually having a lot of impact on it. All right. Let's see, it's time for me to go. I do appreciate you guys coming. If you have questions, if there's things you want to talk about or see, and again, I am putting together a masterclass. I promise you, I am putting together right now. I'm working on 2 PowerPoint presentations. One PowerPoint presentation, which I'll post, is really about the strategies that I just basically talked about on how to trade these volume changes. And the other one I'm going to put together is how to read a prospectus. I had a request for that, so I'll put that together for you guys. And again, I am putting together some classes, which you guys will be able to go online and listen to. And I've been hounded to actually do what do they call it, a master class, where I actually would talk with people individually or in a group and explain certain things. So we'll get that all worked out. All right, have a great one. Look forward to seeing you guys next Wednesday. Make some money. Tell me about it. Oh, one other thing. I know things have pulled back because of what's happening with the not the .coms, with the market right now. But I had mentioned last week the FVRR. I believe they reported earnings today, so I need to go take a look at that. But again, the stock was trading extremely well. When I say well, I mean really well. It went to an all-time high ahead of earnings. Now I'm looking for the stock now. And of course, at the hours, the stock is down 13 bucks. And the reason why these stocks are down is because some of them are beating numbers. I have to look at this one, but no one cares right now. There's not much follow through. All right, let me hop, and you guys have a great one, and I will see you next week. Make some money, guys.